So gold is going absolutely parabolic, crossing to all-time highs, while people literally lined up on the street trying to buy some. Bitcoin is really struggling at the moment. Down from all-time highs of $126,000, it bounced at $103,000 and it's really struggling to cross 110 and maintain it. According to one man who has been right before, he has a crazy theory that not only is gold being artificially inflated and might be continued to be inflated to $16,500 per ounce, but the theory goes that Bitcoin is also being artificially suppressed until the time is right and they intentionally flip the switch and Bitcoin will skyrocket to $444,000 per coin. And it's really important that you watch this video and listen and understand this theory, because on the off chance that this is true, Josh Mandel believes this will happen in the next 45 days. Hit that like button. Let's jump in and explore this crazy but potentially true theory from Josh. Now, this is Josh Mandel here. If you're unaware of who he is, people call him the Bitcoin prophet. Why? Because he made a crazy prediction that Bitcoin would hit $84,000 on March 14th. Now, he made this prediction all the way back in November, so like 5 or 6 months out from the actual date. And not only did it hit $84,000 right on March 14th, but it hit it to the dollar before bouncing. And therefore, Josh says that we are in the timeline that prediction came true, and therefore Bitcoin will top out at $444,000 this cycle. We are getting to crunch time because Josh keeps getting asked, because the deadline is coming up, over and over, how are we going to get to $444,000 per Bitcoin, which would need $8 trillion to move into Bitcoin over the period of just 1 month, of which Josh answers, and this is the hint at the theory he's got around gold and the devaluation of gold, which we'll get into in a second. He says, the dramatic repricing could simply be made as a matter of fiat. As FDR simply announced a change in the price of gold, Donald J. Trump could also make a similar announcement going the other way. There are so many things that have occurred in the past which could explain a dramatic 3x in price of Bitcoin in the matter of hours, days, or months. He says those who do not study history will not be prepared when we repeat it. And this theory, guys, that we are breaking down together is absolutely fascinating. And Swan Bitcoin actually did an excellent write-up on Twitter. So we're going to be using their thread they put together as a crutch. Swan says, the US is cornered. Record peacetime deficits, rate cuts into sticky inflation, and fading foreign demand for treasuries. They say the US cannot raise the interest rates without detonating the debt because they have so much debt that they cannot afford a high interest rate payment in order to pay it off. They also cannot just turn on the money printer because that is going to kill more and more confidence in the US dollar. So what do? Well, they buy time. And how do they buy time? The theory goes they buy it with gold, which is what we're currently seeing on the gold charts. Swan says, enter the gold first theory. Use gold, the one asset the US holds in massive quantities. Let's have a look at those quantities because I pulled this up. The US hold 8,133 metric tons of gold. And second best is Germany at 3,300. And you can see it drops off an absolute cliff all the way down to 1/10 of the holding is Japan at 765 metric tons. So they have a massive market advantage for the price of gold going up. And they use this to quietly recollateralize the system, absorb the inflation, and restore credibility while keeping Bitcoin, the uncontrolled asset, from front running the move. They want to keep Bitcoin suppressed and not absorbing this inflation because they do not have the unique advantage of holding massive quantities of Bitcoin compared to other countries. And Josh Mandel predicts they could even inflate the price of gold all the way to $16,500 per ounce. That would work in the US's favor because they hold so much of it. Perhaps the US has played possum with the suppression of gold price and unwillingness to publicly audit and prove gold reserves. Remember, audit Fort Knox, Elon was going to audit it, Trump's going to audit it. It's just out of the news cycle now. Josh continues, perhaps they've been quietly accumulating gold and now back the monetary base with 100% collateralization at a price of $16,500 per ounce. Currently, even with the old stagnant published accounting for gold reserves, which, guys, look at this. This is the most absurd thing I've ever read when going through this theory. The US value their gold at $42 per ounce. You can see here, the Treasury is sitting on a $750 billion gold hoard, officially valued at $11 billion. And you go to literally the status reports of US government gold reserve, the book value of gold held by the US government is $42 per troy ounce. You saw at the start of this video, it's currently at $4,300 per troy ounce. This information used to compile this reporting is received from the US Mint, Federal Reserve Banks, and the Bureau of Fiscal Service. They're literally valuing their gold at $42, which is the price in 1970. And so Josh Mann's theory is that they will revalue the gold at $16,500, which at the current reserves, which Josh has done the math right here, would back 75% of the US debt. And Josh is suggesting here that maybe they've been playing possum and actually buying up gold cheaper to cover 100% of the debt without telling anybody. And so what this would do, you could think of an example of someone with a credit card and they've spent a lot of debt, really hard to even pay the interest on the debt. But by the way, we have a house that we're valuing at $1. Now the house is actually valued at $3 million, what the house is probably going to be valued at. And therefore you can extend your debt and people will loan you more money because you have more assets to loan them again, like gold. And so Josh Mann is saying if they artificially repeg gold to $16,500, they can wipe out their entire debt. And for those of you who know what this actually means, when you revalue gold at $16,500 per ounce, you are devaluing the dollar at basically a 4-to-1 ratio, which would work in the US's favor because if you owe $20 trillion, but now all of a sudden $20 trillion is only worth $5 trillion because you've devalued the dollar, you owe a lot less debt and it becomes way more manageable. And so we'll get back to that in a second because there's a second and a third component to this. Swan say, meanwhile, Washington's exporting short-term treasuries through stablecoins. Dollar-backed tokens is the new petrodollar. The petrodollar was basically enforcing that everyone who invests in energy and oil all around the world have to be dealing in US dollars. However, since 2023 and onwards, a fifth of global oil trade is not currently dealt with in US dollars. China and India are doing it in their local currencies, as is Russia. And therefore, there's a lot less demand for US dollars. And because the confidence in the dollar is fading, they cannot just sell T-bills to every single country. However, the new kid on the block is stablecoins. You can see here as the US print T-bill purchases, which is literally printing IOUs out of thin air and promising that, I don't know, if Japan buy them, you'll pay them back with interest in the future. You can see stablecoins in here was the third biggest purchaser. And in fact, stablecoin issuers, because if you go and buy Tether, you go and buy one USDC in crypto, Tether and Circles need to go out and buy $1 of treasury assets from the government. And so if you're putting in 182 billion, which at the time of recording, Tether alone now is valued at 182 billion plus every single other stablecoin, the US is actually getting someone to buy their debt again. And so Swan Bitcoin say that's the bridge. Gold is repairing the past and the revaluation of gold. All the debt is going to be disappearing. Stablecoins are going to fund the present and the current debt so that the US can continue to print money. And Bitcoin, this is the third piece of the puzzle, is going to secure the future because Bitcoin is the only collateral that settles itself. What does that mean? Well, gold is flying at the moment. You see a lot of those gold bugs posting memes like this, which is gold, silver, platinum, and palladium, all dressed up as soldiers. And you got Bitcoin in a clown suit pretending to fit in. But in reality, it's the other way around. Swan Bitcoin says, why does Bitcoin look so weak? Maybe it's not weakness at all, but suppression. Keep Bitcoin steady, let gold run, and control the narrative. A managed reset where the US rebuilds confidence before unveiling the real reserve, which would be Bitcoin. Now, we'll get into why that would be a thing in just a second, but Swan continue, whether this theory is true or not, the incentives align. Gold repairs the balance sheet, buys us time, and lures BRICS into a gold standard trap. Once every other country is trying to buy up gold because the price is through the absolute roof, and the US dollar gets devalued at 75%, because also, if you think that's crazy, guys, that's happened in the past twice, once in the 30s and once in the 70s. Well, then the US will pivot, and a US-led move to Bitcoin that resets the board and reclaims monetary dominance. So once everyone's buying into gold, that's when you buy the truly scarce asset of Bitcoin, and that's when that goes through the roof. And Josh says it's time for Bitcoin to chase all the way up to $444,000 US per token. Now, Why is that the case? It's very obvious once you've done the study. Well, first of all, gold is not the best store of value. Its supply can spike from a new gold mine. It can be created in a lab one day. I can't send gold to anyone, anywhere. I can't divide it fractionally to use it. The government can confiscate it, and I can't easily own and store it. Bitcoin is better. Not only that, people do not understand supply and demand. As gold's price skyrockets, so does the incentive to go and create companies, go and get the machinery to go and mine more of it. Because there is so much gold that we haven't mined, increasing supply and diluting everyone who's buying it at all-time high prices. However, you cannot go and mine more Bitcoin when the price goes parabolic. It doesn't matter how much incentive you have, there is no more than 21 million Bitcoin. Cook says gold is inferior to Bitcoin. Gold faces several existential threats that Bitcoin does not. There is a golden asteroid in space humanity will mine soon. Peter Diamandis is literally creating technology to do this. A golden asteroid means supply up and price down. Humans made an ounce of gold in a lab recently, just like lab-grown diamonds, and diamonds are crashing in price. Commercial gold-making machines are in development, and any of the above factors will collapse the artificial supply and demand dynamic gold currently enjoys. Gold's going to zero, Bitcoin is going to $1 million. And Anthony Pompliano talks about how this is already happening. In fact, even with the recent pump, gold is down 84% when priced in Bitcoin. Bitcoin will eat almost every single monetary asset in the world. And Peter Schiff, who is the famous gold bug, the infamous gold bug, should we say, he says gold is more likely to hit $1 million per ounce than Bitcoin is. And Borovic says gold at $1 million per ounce is $6.75 quadrillion market cap, where Bitcoin is only a $21 trillion market cap, less than the current market cap of gold at $1 million per token. And not only does Josh think this is happening soon, a lot of other smart traders on Twitter believe that gold always front runs Bitcoin. Elon Trade says when gold peaked in August 2020, Bitcoin ran from $10,000 to $60,000 within months. And now we're seeing a similar setup. Gold euphoria, Bitcoin oversold, and macro conditions starting to ease. And whether you believe in Josh's theory or not, he advises, if you do not study history, if you do not understand that this has been done before there was the escape hatch of Bitcoin, both by FDR in the 30s and I believe by Nixon in the 70s, you will not be prepared when we repeat it. And for the first time in history, guys, you have to be grateful that there is an escape hatch. There is Bitcoin, a truly decentralized and truly scarce asset that the US government or anyone cannot revalue like they can with gold overnight.